Welcome back to Squawk Box. BlackRock shaking up the business world with that decision earlier this week to make sustainability the focus of its investment strategy. I spoke with Larry Fink about why, as the world's largest asset manager, he decided to make what he's calling a fundamental shift.
We believe a portfolio that focuses on sustainability and climate change will be a portfolio that outperforms. So the main component of the letter is saying this is going to be a great investment over the next 10 years.
Joining us right now is Hal Lambert. He's the founder and CEO of Bridge Capital, and Ken Taubes. He's the chief investment officer of Amundi Pioneer Investment Management, one of the first movers on the ESG investment criteria. Hal, I want to start with you. You think that Larry Fink is making the wrong decision here?
Well, what the American people need to understand is that there's been a war going on against American companies for at least the past 20 years. It started with a small group of left-wing agitators. It's mushroomed into hundreds of 501c3 companies funded by the usual sources that have gone after the boards of these companies to try to effect policy changes that they can't get passed legislatively through Congress or through state legislators that conform to their view of the world. And let me tell you, they're winning. There's only a couple of groups on the right that are pushing back on this. So while the rest of America's gone to work every day trying to pay their bills, companies have adopted new policies, these social responsibility policies, and now they're using those policies to implement things like defunding, Congress people that don't agree with those positions, trade organizations that don't agree with the positions. And let me tell you, these left-wing groups they don't care at all about the profitability of these companies. They only care about what's happening in their social responsibility world. So yes, I think Larry Fink is making a mistake. If you look at what he said in your interview, Andrew, there were two big red flags in that interview. The first was he said that, hey, when he was writing this new letter on his social responsibility compact to sustainability that he's doing with his investment on the firm level, he was very emotional as he wrote it. Why do you want an investment manager who's emotional about the investment decisions he's making? The second red flag on this was that you asked him, and this is the biggest one, you asked him about ERISA's mandate that you have to focus on the profitability of creating the highest investment returns for your investors. And he said, yes, he knows about that. He wishes he could change it. So he actually said he wishes he could change that mandate that you have to focus on creating the highest returns for your investors. Those are really troubling signs from a company that's now managing trillions of dollars for investors.
Hey, Ken, obviously I know you take the other side of this, but speak to the economics of it, because at least my understanding of the way Larry Fink was trying to describe it was he was saying that he was doing this on behalf of the clients and that he was being pushed by the clients to do it and doing it because he thought it was a better investment.
Well, thank you, Andrew, and good morning. Look, we're not politicians. We're investment advisors here, and this is something we've been doing for almost 20 years at Amundi Pioneer without the heat of politics. Hold the Press is activists who have been trying to affect politics for hundreds of years, and nonprofits have been trying to affect their goals and manage their activities in ways consistent with their objectives, are now trying to use their money, have their money invested in ways consistent with their goals. I don't think that's so out of line. In fact, we're happy to advise and manage those kinds of clients that want their money managed in a certain way that has a certain impact. But of course, that's not the way we manage our mainstream open-end mutual funds, where we have all comers from all parts of the country with all different types of political views.
Just to get to the original point, though, in the culture wars, are you offering funds? A war has two sides, typically. So in the culture wars, are you offering funds that appeal to both sides in all the culture wars? I mean, we haven't decided on a lot of these contentious issues that we're talking about. So Larry Fink has his own predilections. He gets emotional thinking about his perceived the future that he thinks we're facing for whatever reason. There's other people that don't feel that. Do you have funds that someone that might have the opposite viewpoint might want to invest in, or just that one progressive side of everything?
Well, we don't have funds that have a political objective for open-end mutual funds. No, let me, if I can make my point. We're not here to battle the cultural wars. That's battled in democracy. We're here to manage our clients' money in the best way we can. And in fact, when you look at some of the criteria that are out there in the nomenclature of ESG, or environmental, social, and governance, it's not an investment style. They're just another set of criteria to be used in order to judge the 360-degree prospects of a company. Let me give you an example. Fracking is a very controversial culture war item. You keep talking about the culture wars. You know, I have a view, you have a view, everybody has views on fracking. That's not the way we invest. What we do with fracking is, what is the risk to the company? There are parts of the United States where fracking is perfectly well accepted and there's no regulatory changes going on. Colorado voted down changes. Texas, it's open season. However, in Pennsylvania, they're making changes. So what's the risk to our companies that have most of their properties in Pennsylvania, which can have severe regulatory? It's not that I have a view. It's that the democracy is changing.
Well,
we have to react to it.
Ken, and a final word to Hal here. Just speak to that issue, though, because and one of the things that Larry Fink did say was that he believes there's a new generation, whether it's millennials or otherwise, who are going, by default, at least directionally, to want to invest more in what might be described as sustainable companies. They're going to be implementing regulations like this that are affecting the way Ken and others are thinking, Hal.
Well, that may be, but there are millions of Americans that don't have that view. And, you know, when you asked Larry Fink in your interview about those people that don't share that view, he didn't have a very good answer, because what do you do? He said, oh, well, we'll work for them, too, but only if you have, what, hundreds of millions of dollars that you can do a separate account with? All their funds appear to be going towards sustainable investing, which many people don't agree with. So what do you do then? Are you going to have to move your money out of BlackRock if you don't agree with that investment approach? Because I don't see an alternative to that. And look, this is much deeper than trying to pick a fracking company or not a fracking company. This is an attack on companies around the country to change policies at all the companies. And by the way, if you think you're a private business and you're going to be immune to this, you're not. They're forcing these companies at the public level to also look at their suppliers and say, hey, are your suppliers conforming to this?